Liabilities are what the company owe. They are categorized as current liabilities or non-current liabilities. Current liabilities are short-term financial obligations due within 1 year. They consist of the current portion of long-term debt. Example is, let's say you take out a debt for 3 years or a loan from the bank. The portion of this loan that's for this year, that's less than 1 year, is considered as current. Accounts payable is when you buy something and you haven't paid for it yet. You bought it on account and you will pay for it later. You account for it as an account payable. Interest payable is the amount of interest the company owes as of date of the balance sheet. Salaries. Since the company has to pay its employees on a monthly basis, salaries are considered current liabilities. They are liabilities towards the employees. Unearned revenue. This is a very important topic in accounting and it has its own chapter. We will talk about it later. Unearned revenue is, in a simplified way, when someone pays you to do a specific task or to deliver him a product or a service. You get the cash, but you haven't performed your obligation. So the revenue you made is considered unearned because you haven't earned it yet. So it's a liability towards your customer. Non-current liabilities are considered as bonds payables. They are a form of long-term debt where the issuer promised to pay interest on a monthly or semi-annually or quarterly basis. It depends on the agreement. And to pay him back, to pay the holder of the bond, the principal at the end or at maturity. Deferred income tax liability. It's tax due for current period but not yet paid. We haven't paid our taxes yet. It's a liability towards the government. Pension liability. What is pension? Pension, it's basically like an amount the company puts on the side to be able to pay its retirees. So pension liability is the difference between the amount due to retirees, the amount they should pay to retirees, and the amount of money the company actually has on hand to make those payments. So in this case, it's pension liability, especially when the amount it has, the company has, is less than the amount due. So it doesn't have sufficient amount to pay the retirees. So they have a liability towards them.